What's up, everyone? It's Caddy with Money Investing. So the market's definitely taking a little bit of a beating here. Once again, we've got the VIX spiking a little bit, and it's up over 9%, just a little bit shy of our estimate of our target of close to 24, 25 levels. But again, before we get started, please make sure that you guys drop a like. I'm seeing that we have a little bit over 60 people joined in, 80 people now. But again, make sure that you guys drop a like. Let me know in the comment section, live chat, if you guys can hear me fine, if you guys can see the screen without any issues. But we're definitely seeing that spike in the VIX, right? The high for the day, 25. And we also broke down earlier the inflation numbers, which came in, of course, much higher than expected. The total CPI now sitting well over 4%. And the core CPI well over, 3%. It was sitting exactly at 3%. So all right, perfect. Silas says it's all good here, so you guys can see me and hear me absolutely fine. So we are pushing higher. So yeah, I mean, it's pretty crazy. VIX up, QQQ is down over 1.85%. Wow. I mean, and that's off the lows. Like, I can't even imagine how much we were down trading all the way. Another 45 basis points. We're down over 2% at one point, and the S&P is down a little bit over 1%. So again, we're seeing a little bit of a rotation away from tech over to value and cyclicals because of the trend. That's been the trend, and the yields are up over 3%, 3.41 to be precise. And we're seeing. Let's take a look. So let's just split our screen three-way, and look at the yields. Just yields rallying to over 1.6, and this is coming in from like 8:15 a.m. From 8:15, we've gone from 1.6 to 1.68. That's a jump of just over 4% as the markets are continuing to sell off. And again, that's because of inflation. We talked about it earlier. For those of you who are joining in, let's take a look at that inflation figures, shall we? So, all right, that right there is going to be the inflation numbers very quickly that we're going to break down. So, all right, let me take a look here. So, all items basically jumped here. You'll notice. All right, that's where it is. A little bit over 4.2%. The expectation was, I think, 3.6. So coming in from 2.6, the expectation was to go to 3.6. That was going to be a 1% increase, but instead we are seeing that 4.2%. And if you look at everything except for food and energy, so that's going to be core CPI, we're sitting exactly at 3%. The expectation for this one, I believe, it was at close to 2.6. So we're seeing that increase for both of those inflation figures. And a lot of it obviously coming in from used cars, apparel, retail, energy, commodity prices have been going up as well. So all that is being reflected in that CPI report. Jason, what's up? Welcome back. Thank you so much. And yeah, the market is struggling. This is going to be the one-day chart for our select sector index. So we've got the yields pushing higher. So the yields are up over 3.4% like we looked at earlier. So let's go over to our main chart. So yields, US 10Y up over 3.5%, so to speak, or 4% relative to other sectors. And then energy up over 2.5, right? Why? Because US oil, so oil prices, you'll notice, let's take a look, energy. So it's going to be this. We've got US Brent, or crude oil, that's up over 1.5%. Let's go over to the daily chart. And we're seeing Brent oil also just shy of $70 a barrel, up over 1.5%. That's resulting in Chevron and ExxonMobil up. Chevron more specifically up over 2.5%, trading well over $109. That's what's causing energy to really rally on the day, and then all the other sectors are kind of lagging behind. And tech and consumer cyclicals, two sectors all the way down here, XLK and XLY. Those are two sectors that are significantly in the red. Andre, what's going on? Welcome on board. Glad to have you here. So yeah, definitely seeing significant sell-off for tech and consumer cyclicals, which includes Amazon and Tesla. All right, let's take a look at the volatility here. We kind of got tapped out at 25. I want to say that's about as high as I can personally see the VIX going. If you do see another spike here, 30 is going to be like that level. Like, this is I mean, this is the volatility again spiking because of the uncertainty related to inflation. We got some more clarity, but the clarity is not what a lot of people were expecting. The numbers coming in much higher than expected. We've seen that spike in VIX time and time again. You know, when we covered this chart in one of our previous videos, that, you know, we're coming down, coiling in hard at those 16 consolidation area right here, and a spike is not something that's unlikely and something that we can expect moving forward. Let's take a look at that weekly chart for the S&P and where that's sitting. So let me actually pull up the weekly chart here. How are you guys doing today? What's going on? Yunus, thank you so much. I'm doing well. I'm doing great. Thank you so much for asking. But definitely the portfolio isn't doing so well. But that's, you know, that's just part of the markets. All right, let's take a look at the SPX. So yeah, we're seeing a little bit of a pullback, and the RSI is now trading as low as 62 on the weekly chart, right? This is the exact chart that we covered on our daily market update, and I mentioned that again, the RSI near overbought levels. Wouldn't be surprising if you do see a little bit of a pullback here, and we're kind of hitting the upper band of the higher highs here, so be mindful of that potential correction in the S&P 500, right? The NASDAQ continues to kind of take a beating here. So if you go over to our main chart, let's go over to, so VIX, the VIX is up over 11% now, and the NASDAQ again continuing on that sell-off. 13,000 is going to be the level of support. It's going to be the first line of defense that we need to kind of validate and see if we can kind of hold up above that level, or if we see some more weakness for the NASDAQ here. Let's look at some Dow 30 stocks. So we got Pfizer that's up. Again, Chevron, ExxonMobil are up. JP Morgan's up over 79 basis points. Across the board, we're seeing McDonald's, Boeing. We got Nike that's down over 1.3. Walmart is down over 1.5%. We got Visa, Apple. Oh, Apple down over 2.2%. Absolutely incredible. We're breaking down below that support, no doubt about that. 124 is potentially going to start acting as a new resistance now if you close below 124. We're seeing that RSI come down heavily at close to 33 levels. So Flaco says sniping Tesla covered calls. Andre says it's going to be a very terrifying rest of May. So most of us, CPI was already released at 8:30 a.m. in the morning. We covered that. We have a video on that. You're more than welcome to watch. It came in much higher than expected, so of course that's what the market is pricing in this time around. And this was something that we were expecting in general because the base effects are out. So even next month, like I can tell you right now, the next month when the CPI report comes out, we're gonna see even a more sharper increase potentially, because the April numbers are gonna be, the May numbers are gonna be different than what we have already seen, right? So actually, let me see if I can pull that up very quickly. So we're gonna go over to BLS.gov. So very quickly, we're gonna go over that. Just so we have a good understanding of what next month looks like. I think next month is going to be another pretty sharp increase in CPI or inflation, and then after that, you know, I could see kind of leveling off for the. So May 20th will be released on June 10th. If you guys did get a chance to look at that date, June 10th is when we're going to see that next CPI report. But when we do report for the month of June, so you'll notice April over April, we're seeing that number kind of play off, and when we report for the month of May, that's gonna come next, we're gonna see April kind of fall off, and that's a big negative 0.7 figure, right? So that's gonna fall off the previous 12-month figure, and we could see some like a more sharper increase in this total CPI and core CPI number. And again, coming in from April 2020, May 2020, you'll notice such low figures. So, you know, trailing 12-month is going to look much higher. So we could even get to as high as 5% maybe for the total CPI. The core CPI is already sitting at 3, excluding food and energy. So maybe it gets to like 3.5, 3.8. But then after that, we're going to have to like really understand if it's going to continue to go to the moon or if we're going to see some stabilization here. So like it needs to push up and then start curling down, or like basically plateauing at some point for us to see that stabilization. If that doesn't happen, then you know what's coming, right? You know what the Fed is going to be focused on, and that's what the market is going to speculate heavily like going into 2022 is the rate hike. It's a rate hike, and that's what everybody's going to be like pestering the Fed, like, what are you doing? When are you doing it? And as soon as that happens, man, tech and growth is going to be a little bit of a wild ride for tech and growth here. So, all right. So SPY 390 turnaround. Let's take a look at SPY here. So trading as low as 409, 405, so 405 is the 50 EMA, all the way as low as 397 is what we would be watching. So Shiba Inu is my hedge. It's funny you mentioned that. By the way, I want to go over this with you guys because this is, again, very interesting. We covered this in our daily market update. So, all right, let me take a look why that's not pulling up. Because it was, you know, when we covered this, when I was looking at these Google Trends yesterday, it was just insanity at how much the search terms or these, like, you know, this is skyrocketed. Like Shiba, you know, like if you just search it on Google, this thing was flat the entire year, and now we're seeing it spike, break out to new highs at over 100. And at the same time, you're seeing some of those other trends like crypto trading, crypto investing, you know, break out to new all-time highs, because that's where people are searching for. ARK Invest coming down to new lows, right? Tech stocks coming down to new lows, literally 1 year low. This is, I'm not even kidding. Like this, if you come back from like May 2020, if you draw a straight line across the board here, you know, you're coming down below that level. So less and less interest and exposure to tech and growth, while value stocks push higher. Dividend stocks push higher. You know, stimulus coming down to a new low. Ethereum prices, which we'll go over in just a second, going up to new all-time highs. Bitcoin stabilizing. Dogecoin breaking out to new highs. Right? Growth stocks coming down. So, what do you guys think about this like shift that we're seeing in the markets? Right? There's an interest shift. There's a behavioral shift. You know, there's a complete rotation, of course, from institutional hedge fund standpoint that are not loving tech and growth right now. They're moving away to like more value cyclicals. But even on the retail side, right, we're seeing more of a shift from stocks in general to cryptos. Thoughts on Doge, please. So on Doge, I've already mentioned that I'm rooting for you all and everyone who's investing and trading in it. You know, it'd be really amazing if it gets to $1. I'm personally haven't invested in it, but definitely I'm rooting for you all. Over the long term, I'm no crypto expert to really understand the utility or the usage of Dogecoin. I have read up on Ethereum and Bitcoin. They're more serious projects as much as I'm aware of. So long term, just bullish on cryptos in general. I'm very bullish on the blockchain technology, and I could see a lot of applications and usage for the technology in general. But again, I'm not really sure who's going to be the real winner in that space. Of course, Bitcoin and Ethereum are the obvious winners. But again, I feel like the industry in general, the space is very new. It's in a growth phase. It's going to grow a lot in the future. It's the same as I see like electric vehicle space, right? We've got so many different companies right now, but over the long term, I know that electric vehicles in general are going to be adopted across the globe. Like there's going to be so many electric vehicles, you know, as we fight global warming, but there's only going to be a handful of companies that are actually going to win out. So there's only going to be a handful of cryptos, in my opinion, that are going to be very, very, you know, substantial and dominate most of the market share when it comes to that sector. So Silas says I'm going to try meme trading. Ali says crypto is the future and people are seeing it finally. RG Dream says why value stocks and dividend stocks are also red. Value and dividend stocks are actually up on the year. They have been outperforming a lot of other stocks, including tech and growth. So you know that is also very interesting because there's been a lot of dividend stocks, regardless of whether they go up or down. I mean, dividends are dividends. Like they're still paying you dividends, and then of course you're getting the capital gains on top of that. So they have been, on a return adjusted basis, they have been outperforming some of those growth and tech stocks. Let's take So do you guys want me to look at some cryptos or just keep it with stocks here? We got a little bit over 277 people. Make sure that you guys drop that like. It really helps out the channel here. So the NASDAQ plummeting over 2%. 2%. Let me pull up the chart for some of those individual stocks because I really don't even want to look at it today. Lemonade's down over 16%. We got QuantumScape down over 7%. Palantir's down over 6.5%. Let me pull up the 5-minute chart so we can really understand what the 1-minute chart looks like for these stocks here. Litecoin is also an interesting one. I mean, Litecoin and Ripple are two coins that I've heard a lot about, but I've really not done any research, so I'm not sure what the utility is for them, but I've heard a lot about them. All right, so this right here, QQQ's making new low of days. Down over 2%, and tech heavy is definitely getting hit pretty substantially. Microsoft now trading right at our support at close to 239. 238 I think is what I mentioned yesterday. Apple definitely breaking down over 2%. Let's take a look at some of the growth here. Growth sector down substantially. All right, so Palantir, $18.85. Definitely seeing a lot of weakness after the earnings. And Palantir has always been one of those stocks that takes 2 steps forward, 4 steps back. Takes 1 step forward, 3 steps back. It's always been one of those stocks that continues to have these days where we'll come out with a 9% gain, and then the following day it'll just give all that back, right? So that's just been like the case with Palantir, and I feel like Palantir has also been struggling with the timing of some of those things. Like it's one thing to underperform or be red when the entire market is red, but it's another thing when you're red when the entire market and growth stocks are green, right? That's what Palantir struggles to do, is that when the entire market would be green, Palantir would still somehow find a way to sell off. And then, of course, on a day like today, like you can't expect Palantir to outperform the entire market, because when the NASDAQ is down 2%, you're going to find those tech and growth stocks be down, multiples of that, which is why Palantir down 7%. Fiverr's down over 5.5%. Square's down over 5%. Trading just under $209. So yesterday, if you guys remember, I put out a video going over, how this could potentially be a bull trap, meaning that the patterns haven't confirmed a reversal just yet. We're still trading below the moving averages. So if you look at some of the big tech stocks, Amazon, Apple, like some of those companies still trading below the moving averages. So in order for us to see a successful trend reversal, what needs to happen is we need to see some type of consolidation first. Consolidation first, and then we can see some recovery and a breakout. Successful breakout is what we need to see over those moving averages. So Twilio down over 5%, Pinterest down over 5.6%, DraftKings also getting hit very hard, down about 4.5%. We got Shopify down over 3.69%. Hovering around 1,070 though, so Shopify $1,070 is going to be the level to watch as a support. Peloton still struggling, down now under $90. Yesterday was a pretty green day for Peloton, so we did push up from the lows. We were up over 9% for Peloton. But then we're pretty much giving half of that back today. Enphase Energy is down about 3%. Damn, this market is really like repricing a lot of these stocks to a point where it just doesn't even make sense for a lot of these companies to be trading at these levels. I mean, we can make an argument that in the EV sector, like some of those other stocks, like they were trading at a very high multiple, but I feel like companies like PayPal and AMD, Amazon, like some of those companies, after reporting great earnings, they're just continuing to like sell off because of the market. 4,000 mark, and if so, does that mean Tesla stock will pull back with it? Jay, unfortunately, yeah, that is true. If the S&P and the NASDAQ pull back, the individual stocks are at the mercy of those broader markets, right? So right now is a perfect example. We're seeing the S&P, the NASDAQ, I think even the Dow Jones is down. Russell 2000, that's going to be ticker symbol RUT, that's down over 26 basis points. So that's pretty interesting that we're not down. Oh, this is the end of day. I really need to find the ticker for Russell 2000's actual All right, let's just go over to this because this is going to be an ETF that pretty much tracks. All right, so IWM, that's down a little bit over 1.3%. So we're still seeing that small cap sector get hit about 1.35. Of course, the NASDAQ is the biggest loser on the day. And the Dow Jones is down about 1%, right? So this is going to be the Dow Jones Industrial, trading just under 34,000, down about 1%. S&P is down over 1.3, and the NASDAQ down over 2%. So, I mean, if we see more weakness for the NASDAQ, for the S&P, NASDAQ is going to be 13,000 next level to watch. The S&P is going to be roughly 4,100, 4,000. Unfortunately, these stocks are going to continue to go on discounts and sales, and you're just going to find these deals after deals after deals. So, all right, Fubo TV, wow, up over 11%. So, yep, they reported their earnings after hours yesterday. So they are up substantially from those earnings calls, and we're seeing that. Well, I mean, we're still intraday weakness. We're seeing a little bit of sell-off. So we were up all the way as high as 22.60. Let me see if I can break down the earnings call very quickly here for Fubo TV. All right, so Fubo TV loss narrows as revenue surges, raises 2021 guidance. So that's good, right? Anybody who's raising 2021 guidance is really good, and of course, if they're beating expectations with revenue, EPS, although the market is really not pricing that in for a lot of those companies, but that's as a company, I would assume that that's your job to do really well, right? As a company, your job is to beat revenue, beat estimates for EPS, and provide a very strong guidance. And then you can just leave it to the market, right? The market obviously is not, in my opinion, not very rational right now in the way we are thinking. Of course, with the inflation being a big piece in the markets and driving a lot of uncertainty. But revenue surged to $119.7 million from $7.3 million. So that's a very, very substantial increase year over year. The estimates were $103.9 million, so there's definitely a revenue beat there. EPS loss came in at 59 cents per share, narrower than $1.83 a year earlier. So again, narrowing those losses, and analysts expected 57 cents loss. So they did miss a little bit on EPS, but they beat revenue guidance, and they provided a stronger future guidance as well. So expects Q2 revenue to be just about 120 to 122 million dollars, and subscribers to be 600,000 to 605,000 people. And 2021 revenue outlook is going to be just about 520 to 530 million, from prior range of 460 to 470. Subscriber outlook 830,000, 850,000 for previous guidance of 760 to 770,000. And the street forecast was just about 100 million in Q2 and 472 for the full year. So again, they came in much higher than expected. So yeah, I mean, we're seeing a little bit of a pullback here for Fubo TV too. But that being said, we got Netflix that's down over 1.5%, trading under 490 now. And then we got Amazon down another 2%. I think yesterday was up over 1%, barely. It made it, but now it's down over 2%. Let's take a look at NEO. So NEO's actually holding up decent, I should say. Because on a day like today, I would not have been surprised if NEO would have been down like 6% or 7% for that matter. Of course, I don't want to jinx it, but right now we're only down about 2%, which is normal, which is okay for a company like NEO. Just had another successful retest of Tesla at 600. Harry says Tesla should bounce up some now. Yep, 600 is going to be a really strong support to watch for Tesla, so hopefully we get that bounce higher. Fubo was up 20%, it's now down to only being up 11%. Yep, so we're seeing a little bit of intraday weakness. And again, on a normal day, like if this was not being driven, the market was not being driven, by fear, uncertainty, Fubo TV would have been up 20% and more, like intraday. We would have seen that rally for Fubo TV, like after these strong earnings reports. But again, this is the market that we're in, right? So we're seeing a lot of doubt and a lot of sell-offs from those institutions as well. So all right, EV sector, ChargePoint down over 4%. We got Lords down roughly 3%. Blink Charging, I think Blink Charging also reports their earnings. Is it today? Tomorrow. So tomorrow after the close, Blink Charging also reports their earnings. We got General Motors that's down. Tesla just trading at roughly $602. And then NEO, and then the only stocks that are holding up, Li Auto, look at that surge, 7%. I think they reported, no, they didn't report their earnings. Xpeng reports their earnings tomorrow. But Li Auto definitely had to have some type of a catalyst for us to see an 11% move. So this is already delivery numbers that came out previously. Let me see if I can find some other catalyst on Li Auto. If you guys know any information about Li Auto and why it's up so much, definitely feel free to share. I would appreciate that. But we're up over 8% for Li Auto. By the way, I also wanted to go over some short interest data that we can look at. There was some, on Wall Street Journal, there was something updated on April 28th. So, every 2 weeks we get that report. And now we're in a new 2-week period. So like May 15th is going to be the period that it ends, and that's going to be reported like towards the end of the month. But I wanted to kind of go over some stocks here so we can take a look at it. So I was looking at NIO earlier, and I was expecting to see a significant increase month over month in terms of the short interest, but fortunately it's not that much. I think it's less than 1% increase month over month, and all right, so not even like 0.1%, so 0.09% increase from last month, and percentage of float is still sitting at 5.7%, and this is as of April 30th short interest data for NIO. So let's take a look at Palantir, see what that looks like. And then we'll kind of look at some of the other stocks too to really get an understanding. So all right, there we go, 11.5%. So this was a stock that over the last month saw an increase of just over 11.5%. Even though the percent of float is down because we saw a lot of shorts getting covered once we saw that 50% crash for Palantir. There was like a short infused squeeze all the way to highs of $45, right? We saw that get print for Palantir, and then immediately after that we sold off 50%. A lot of shorts covered, and now we're seeing that increase once again, right, over the last couple of weeks. Again, this is backward looking. This is data that's not very real time. It's not current data because, again, it's reported every 2 weeks. So maybe after the sell-off that we've seen after the earnings yesterday, we were trading all the way as low as $16. Maybe we saw some coverings, but we won't know that until after 2 weeks. But 11.5%, substantial increase month over month. So, all right, Li Auto, is there any news that's come out? Square, I will go over in just a second. Apple, I'll also go over in just a second. But Crypto Candy, new coin with a big potential. Seems like every day there's like at least 10 new coins that are coming out. Thank you so much, Tom. I really appreciate that. Make sure that you guys drop a like. It really helps out the channel. All right, what stocks are we looking at in terms of short interest? Let's take a look at Microvision, right? I know that was a stock that was heavily shorted for some time. We saw a squeeze all the way up to $28-30. All right, so right now the short interest sits at, as of April 30th, just about 21.6% of the float. So still pretty high, from like average levels. Like anything over 20%, like 1/5 or 1/4 of the total shares outstanding is a pretty substantial number. And we saw that with GM and AMC, they were running past over 100%. But 7% increase over the last month, so still a pretty high number for Microvision. So Xpeng reports their earnings tomorrow. I'll definitely cover that. All right, so let's take a look at Tesla. Interested to find out if there's any increase in short interest for Tesla. So actually down, change from last month. It's actually down 19%. So that's interesting. So only 5.34%. So very aligned with NIO's percent of float in terms of short interest. But we're seeing definitely shorts getting covered and net decrease when it comes to month over month levels. So Li Auto continuing to push higher, up over 8% now, over $18. There's no news that I'm able to find right now. I'll definitely do some more research to see if I can get some more information on that. But let's just continue. on some of the growth stocks here. So Mara down over 7.5%. This one, you know, Mara and Riot, I haven't really covered these stocks on the channel, but these are interesting ones because, you know, as far as I knew, they were correlated with Bitcoin, but now we're seeing a huge divergence away from Bitcoin, right? So if I were to kind of go over to the daily chart here, you'll notice that, you know, price of Mara has come down substantially. Let's see if I can actually add Bitcoin here. So you'll notice how Bitcoin's kind of stabilized a little bit. You know, it's not even going sideways, it's not going higher or lower, but Mara has actually come down. Does anybody know why that is? I have to do my research on both Mara and Riot. I know a lot of people are interested in those, but like you're seeing, you know, both Mara and Riot. Like Riot's gonna be in a different line here, so let me actually go ahead and do this in white. So you'll notice that they're both coming down, but Bitcoin's price is kind of stabilized. So that's interesting that we're seeing a little bit of a divergence in the correlation between the two. Alright, so let's take a look here. Fiverr down almost 6%, trading as low as 166. Wow. Alright, let's take a look at Square. So IPOE short interest, let's take a look at that very quickly. Let's see what that looks like. Alright, so almost 32%. Wow. Okay, that's pretty high. 4.6% increase over the last month, and 25.46 million shares of the total 80 million that's outstanding. So that's definitely quite a bit of a number here, 32% for IPOE. Safe Moon Printing, that's great, congratulations. But yeah, Square coming down to a $200 support. That's going to be the level to watch. Actually, let me pull it up on the main chart. Alright, so this right here is going to be the technical breakdown for Square. We're seeing a little bit of a rejection here at 215. $200 is going to be the next support level to watch right there. Not quite a retest of that level. We're still trading at low of days, but we still have a little bit, 4 hours left for the markets to basically close out the day. So where do you guys see the NASDAQ? Let me know in the live chat. NASDAQ down over 2% or less than 2%. So plus 2 or less than 2. What do you guys think for the NASDAQ? To the Earth core. That's a new one. I haven't heard that one before. That's great. We want inflation and interest rates to the Earth core, but we want our stocks to the moon. All right, Tesla coming down, is it? All right, let's take a look. All right, so Uz says we're screwed. I don't think so. I mean, it only depends on your time frame. If your time frame is tomorrow, if you want all the, you know, if your time horizon is less than a year, then yeah, there's a lot of uncertainty. If your time horizon is more than a year, even as far as like 2 years, 4 years, 5 years out, then I can tell you with a lot of certainty that everything's gonna be okay. Long term, as far as the companies that we've covered, like with a strong balance sheet, great upside potential, you know, there's a very small chance, in my opinion, and again, it's not financial or investment advice, in my opinion, there's a very small chance that we lose money on those companies. In the short term, anything can happen, of course. Nobody can actually guess or predict or really understand, you know, where these companies are going in the short term or the next few months, because we're already seeing tech and growth getting hit the hardest. But Sos Short Interest, let's take a look at that very quickly. So SOS, it's actually not available. So it's down over 6.85%, 21.87 million shares sold short, off of 121 million. So that is going to be, let's take a look. So that's 21 divided by simply just 121. So that's about 17.3%. So it's pretty high, actually, I would say, like SOS as well. 17%. So Plug Power, Roderick, I covered a video on a lot of these companies. So like I basically covered 15 stocks. Again, they were all requested by a lot of the subscribers on the YouTube comments and Discord. We covered all these, right? So 15 over here that we covered. Complete technical analysis on these stocks, because on average, I was surprised to find out that they were down substantially. Again, a lot of these names were new. I haven't done any fundamental research or analysis on them or valuation metric on them to really understand, the management or the business overview of what they do. But technically speaking, I did some research on them. I have posted a video you're more than welcome to watch to kind of get my 2 cents on, what the support resistance looks like. Amazon at this price is so undervalued. Danny, I couldn't agree more. This Amazon is just, it's crazy. I mean, if you were to read their earnings report, and even on a simple DCF, very conservative discounted cash flow model, Amazon is heavily undervalued right now, in my opinion. And then, of course, if you take into account some growth valuations like the forward price to earnings, price to sales, your targets can really get to as high as $5,000, $6,000. But Amazon, I feel like advertising business for them is going to be very, very underappreciated right now, but it's going to be huge in the future. Again, digital ad spend is only growing. Amazon is a company that is going to be a big leader in that space, in my strong opinion, because when you think about human psychology, like a lot of times when you're seeing these ads on YouTube, you're not here to actually purchase something. Whereas if you're seeing those ads on Amazon, you're already going in that website with the mindset of buying something. So it makes sense why companies would want to advertise on Amazon versus anything like TikTok or Instagram, for that matter, because people are there to basically consume content and not to actually buy something. So that's kind of like the mindset that I have, and Amazon I feel like is very, very undervalued. Tesla support below 600. All right, let's take a look. I think it was so that's gonna be a white chart. We're gonna open up very quickly. So this is gonna be NEO. We're still kind of hovering around at and around 34. First, quickly this 34. 45 or 34.50. Does NEO close above or below that level today? We got 4 hours left for the markets to close. What do you guys think for NEO? We're kind of hovering right around $34. So above 34.50 or below 34.50? What do you guys think? Nasdaq is about to break 13,000. Wow, really? Ooh, look at that candle for the S&P, down about 1.5%. Oh, look at that drop for the Nasdaq ETF, down about 2.4%. The inflation report really got to us. It really did. Wow, we're only 79 points away from the Nasdaq being down. Yeah, I mean, definitely 13,000 is going to be the first level of support. Let's wait and see if we actually close below this level, because I think it was past, 1 p.m. or I think it was past 3 p.m. There's not going to be any halts, like trading halts. I think the first halt gets triggered at 4%. Let me actually pull that up very quickly. S&P 500 trading halt trigger level. All right, so the first level is actually at 7%, so it's not that bad. 7% is the first trading halt for the S&P 500, and we're a long ways away from that. I mean, in March 2020, if you guys remember correctly, we saw that get hit like 3 times a day. Luckily, they didn't have to shut down the whole market. but that's also before 2:25 p.m. Central. That's going to be roughly, I want to say, before 2:25 p.m. Central, right? So 7% decline is level 1 circuit breaker. All right, let's take a listen on this.
Is accelerating. Investors nervous about the prospect of higher inflation, what that will mean for valuation for the tech stocks in particular, because the NASDAQ 100 down even more than the S&P 500, down 2.5%, and the SOX, or the chips index, down 3.6%, and that index is officially in a correction. In fact, the S&P 500 right now, David, even though it's just 3 days in, on pace for the worst week since October of last year. So all of this just to set the tone in terms of how strong the selling pressure is around the fears of an inflation. Of course, we do have the 10-year yield spiking higher, so nominal yields finally catching up to break-evens once again in what we're seeing in commodities. However, David, the correlation between stocks and yields is breaking down a little bit, so it's important for folks to consider that there could be other things factored in here, including too far, too fast, valuation. Of course, both ideas connected to inflation, but you can consider them separately. And then, of course, the prospect of higher taxes and China tensions. And I bring up China tensions because the selling in the stocks really began before the overall selling.
Okay, Abigail, thank you so much for that report on the markets. That's Abigail Doolittle. As we said, consumer price inflation hit the United States harder than expected today, rising at 4.2% at an annual rate, and raising questions for investors about how to protect themselves against the uncertainty of what is yet to come. Catherine Keating's job is to answer just such questions as CEO of Bank of New York Wealth Management. And we welcome her now back to Bloomberg. Welcome, Catherine. Great to have you here in the studio. So let's start with some of the things that Abigail just talked about. Inflation. How much are people concerned, investors concerned, and should they be concerned about what we've seen from inflation?
Investors always have to be concerned about inflation because inflation is one of the things that can lead to the end of a business cycle, tightening rates, recession, bear markets. We don't see that yet. We actually agree with Chairman Powell that we should expect inflation and we should expect it to be transitory. There are a lot of inflationary forces at work in the market. We're reopening. Right? We wouldn't have been here together last May, and yet here we are. We're reopening. And so we need to expect inflation, and we need to expect some surprises because the economy closed down in a very synchronized manner, but it's reopening in stages. And so we need to expect some of these surprises. And I always think that Janet Yellen has a great way of making economics human, and she reminds us it's not just statistics, it's people's activity. And if I think of my own activity in April, I was representing the reopening of the economy and some of those sectors that really drove the CPI increase. I'm grateful to be fully vaccinated. I was traveling on my first business trip, renting a car, flying on a plane, going to restaurants. Those were some of the sectors.
As we address this question of transitory against not transitory, which Jay Powell has talked about repeatedly, how informed should we be about how much money is sitting on the sidelines, particularly in households? There's a lot of money sitting out there that doesn't really have a way quite yet to express itself.
Well, that's right. If you look at households are in very good shape, right? $3 trillion in household bank accounts, savings accounts. You look at stimulus this year that's going to households, which will actually be twice as much as what went last year. $600 billion last year, $1.2 trillion this year. So households are in very good shape, which again is a good sign for the economy because if we think about the 2008 crisis, that's a crisis that really hit households in a different way because of the housing component of it. Households today are actually in very good shape.
To what extent do people run away from bonds in this environment? Because it seems like whatever happens, it doesn't seem like bonds will gain in value very much going out.
Well, that's right. We have seen interest rates, decline for most of our investing lives, and now we're seeing them begin to rise. And so there's always a role for bonds in the portfolio. It's a smaller role going forward. It's a smaller role because, as you note, returns are going to be much lower. But there's always a role, and we're broadening portfolios to get exposure to other things to make up for what you used to get from your bond portfolio.
We're seeing some of the tech stocks get hit particularly hard. Now, they drove a lot of the market for a long time, and they're still well up overall. But at the same time, what is the problem with tech when it comes to inflation? Is it just because they're so richly valued that when people get nervous, they run away from it?
Look, I think there are two things. I think the tech stocks really, led the recovery because of the way we were spending our time last year, right? They really enabled us to keep the economy open to a certain extent. So you saw tech stocks, get very high multiples because of that, and also because investors were willing to pay for growth in a sector that was growing when you had so many sectors not growing. Now what you see is with interest rates rising, it actually reduces the present value of the cash flows and earnings of tech stocks. And so that's what you're seeing, a rotation.
Well, interest rates are not rising. I don't know why she mentioned that, but interest rate could rise. That's the expectation that a lot of people have. But nonetheless, I mean, tech growth, of course, they're selling off. This right here is going to be the savings rate. So savings rate, again, a lot of what they mentioned was a lot of households, Americans, they've got a lot of money on the sidelines, money market accounts, cash accounts, savings accounts, checking accounts are flushed with a lot of cash because of one reason: personal income. Take a look at personal income, skyrocketed, right? Literally up over 21% in the last month, just jumping to new all-time highs. When you have this with lack of consumer spending, so consumer spending is not as high as what we've seen in the past. So even though we saw like a V-shaped recovery for consumer spending, personal income's up, spending's down, you see that savings rate actually go up substantially, right? So, all right, let's take a look at GDP. So we saw that contraction here for the GDP growth in the last quarter, and we're seeing a little bit of push higher. Not in the last quarter, but in the quarter like in 2020. And this right here again is going to be M2, so money supply. We're seeing that spike 27 or 20. I think it was like 27% that we've seen the money print. 26, close to 26%. So a lot of money supply there, and that's the reopening of the economy. How do they define households? What's your take on news about Cathie Wood? I don't think so. I don't think ARK will be Archegos too. Because what Cathie Wood has also done in the past is that she's taken positions in these big tech companies like Apple, Amazon, and some of those other companies, and she sees them as like cash accounts more so, because of course the balance sheet is very strong for these big tech companies, and every time you'll see like her kind of buy in some of those high conviction names like DraftKings or Tesla or Square, Roku, whatever the name is, she's basically getting that capital out of some of those big tech companies. So like just a couple days ago, we saw Cathie Wood and ARK Invest basically sell close to 87,000 shares of Apple. Why? To buy DraftKings, to buy Square, to buy some of those other companies. And that's what they've done in the past, right? They've sold some of their other holdings in order to have that capital available to buy. So I'm not sure exactly, and I'm confident enough to understand that they're not taking on too much leverage, too much margin, because of how transparent they are with their holdings and with their disclosures, and of course keeping in mind their clients and their shareholders as well. 10 years at 1.68. So let's take a look. So 1.68 is right. We're seeing the Nasdaq continue to sell off over 2.3%, and we're just struggling to catch a bid here for any stock. It's just continuing to make a low of days. If a pattern continues to make a low of days, that is not a powerful sign. That's just continuous weakness for the stock, for the index, whatever you're looking at. So let's take a look at some of the stocks here. So all stocks, we've got, let's start with what's green. VIX, 15% jump back over 25. So definitely running past over 25 levels here. So there is some elevated volatility in the markets, definitely with the inflation fears. But we got LABU, it's like a biotech ETF, but we got Exxon Mobil that's up over, of course, Exxon, Chevron, both oil is up. AMC is running past over 2% today. So we're seeing a little bit of a push higher for AMC. Wells Fargo, Bank of America, so a couple banking stocks with JP Morgan. So, yep, so Zur, yes, I am. Yesterday I picked up a lot of Palantir, I picked up Amazon, picked up Neo, and again, just as much cash as I have coming in, I'm just using that to buy as much as I can for some of those stocks. So definitely, I mean, dollar cost average is kind of like my game plan for some of those high conviction picks that I have personally, that have a longer term time horizon. and of course there's going to be a lot of fluctuations and short-term volatility, but that also represents a lot of discount days. And you have to really pick and choose. I mean, not every deal is solid. Like, in my opinion, Shopify, great company over the long term. Like, I've done the analysis on it, but still trades at a pretty rich valuation. Square, I can make the very similar case, although I'm getting more and more confident into starting a new position in Square. But again, it's still trading at a pretty rich valuation when you look at those forward PEs and price to sales. Like, for example, Amazon is very undervalued for me. Apple is undervalued for me. Tesla, anything under $600 would be undervalued for me. But again, some of those other companies, they need to come down a little bit more for me to be more convinced. Palantir down over 7% now, so giving up pretty much all the gains, almost all the gains from yesterday. Wayfair is down over almost 7%, trading as low as $303. Fiverr down over 6%. Etsy, it's just, it's a red day almost every day. Like the last, starting to lose track here. It was last week green, or was it still red? Can't even remember. Every day 2021 is a bloodbath. When do you think this will end, man? It really is about clarity and visibility, right? So the market does not like uncertainty right now. Next month, unfortunately, is going to be another CPI data that's going to come out, and right now, it's also with the Federal Reserve, right? They're going to have a lot of discussions, and Jerome Powell is going to come out and talk, and Janet Yellen is going to come out and talk. And it's all market's perception of what they think of the inflation is going to be and interest rates are going to look like. Because, when we look at this chart that we broke down in our other video, so let me actually break this down really quickly. So we talked about this. Right? And this is very, very simple. In other words, like on a macro level, you'll notice that there's money supply, there's interest rates. There's only so much that the Federal Reserve can control, right? They can't control people's spending or consumption, right? Because those are things that we control as consumers with the amount of money that we have, with the amount of buying power we have. So there's only so much that the Federal Reserve can control. They can control the money supply, they can control the interest rates, and then everything else, like spending, unemployment, the GDP growth, that kind of falls on the second level, because once they alter these two things at the very top, that's what trickles down to what the spending is going to look like, what the unemployment is going to look like, what GDP growth is going to look like, what we're going to see in the future. So those, you guys can basically think of those as like kind of like the levers that Federal Reserve kind of has access to, and then that kind of trickles down to these three things, and that obviously trickles down to whether we're going to see inflation. These two I mentioned in our other video that we really don't want to see any of these, and the probability for us to see hyperinflation, deflation, or stagflation are very, very slim. Like, that's not even a concern that I have, and it's kind of going from left to right, right? We're going from left to right. Deflation, stagflation, we can pretty much rule these scenarios out because it's very unlikely we see those. In my opinion, I mentioned that we're going to somewhere be landed here. Like, we're going to be in the middle of inflation and something that's super hyperinflation, right? We're going to land somewhere in the middle here where inflation does run past 4%, 5%, kind of averages out around 2.5%, 3%. And then the Federal Reserve comes on board and they're like, okay, we're starting to raise interest rates now because inflation is running up a little bit higher. And that's going to be in 2023, if in 2024. The hyperinflation situation, we get into that if we see an expansion, further expansion of money supply, we see demand pull inflation, meaning the demand continues to outstrip the supply. And another thing that's kind of, I should say, like, was not projected or expected on part of the economy or the Federal Reserve is the supply chain issues, right? The supply chain constraints, that was something that really put dampen on inflation, is because when you have demand, even if demand's stagnant at the same level, you don't change that, and supply goes down, that raises prices. Now what you have is you have a reopening of the economy, you have demand that's increasing and supply that's going down, or there's very limited supply, right? So we've seen that with chips, we've seen global chip shortages and supply chain constraints across the board. That's what's causing somewhat an increase in prices in general. Now, it's very difficult to really predict what the future looks like for the macros. Like, macros, so difficult to really understand where everything is going to sit perfectly, because it's a huge puzzle and you're trying to understand, so many different things. Like unemployment, for example. Nobody thought we're going to put in 266,000 jobs last month. And the estimates were as high as 1 million, right? Who would have thought it was going to come short? And there's specific reasons for that too. There's reasons for, people don't want to go back to work. There's a huge imbalance between, mismatching between workers and employers. We're seeing wage increases. We're seeing temporary workers turned into permanent workers. So there's a lot of different things that we don't have the answers to right now, and that's what's causing the market to be very, very uncertain at the moment. So I hope that answers somewhat of the question a little bit. Well, the answer really is that it's very challenging and it's hard to really estimate when this is all going to end. But one thing I can tell you is that this is short term, because the markets have gone through these periods of rising rates, rising inflation, a little bit higher than expected unemployment, and the markets have continued to kind of be resilient, so to speak, and rally to new all-time highs. It is getting worse and worse. Maybe I should go to bed and then maybe the markets will push up higher, because usually it's always the opposite, but today it's just, we're just continuing to see this sell-off. All right. This is important. This is interesting. Let's take a listen to this.
The unemployment system has a set of rules about accepting suitable jobs, and we, of course, very much support those rules. But at the same time, we have to make sure that we're balancing the needs of employers and employees. And I think that we've hit that balance correctly.
The president also was careful to say that we haven't seen all of the effects yet of the $1.9 trillion American Rescue Package hit the books. There's still money coming down the pipeline, particularly in state and local employment, things like that. We have a pent-up demand, basically in cash, that households have, something like $2.5 to $3 trillion we haven't seen yet. Are we worried that we may be overshooting here?
No, I don't think it's a matter of an overshoot. I think, again, if you look at some of these indexes today, if you look at hotels, lodging, if you look at accommodations, if you look at restaurants, really what you're seeing is an adjustment, a realignment, a kind of a reallocation as people come back in and as firms are starting to feel their way as to what kind of pricing power they might have in this economy. I think, by the way, when you talk about some of the resources that are in the plan, one of the things that you need to, I think one of the, excuse me, I think one of the things that you have to mention here is childcare. And the president really leaned into this on Monday. In the rescue plan, there are significant resources, tens of billions of dollars, to help childcare providers reopen and to help parents who need childcare pay for it. These plans create a path back into the job market for people who face a clear barrier that has nothing to do with unemployment insurance and everything to do with the fact that they need their kids to be cared for while they go back to work. That resource is also in the plan. We think that's very important to help realign the kind of misalignments that we're seeing in these reports.
And finally, Jared, if you would, the president has been meeting with the leadership of Congress, Republicans and Democrats, today on some of his proposals for building back better, the various infrastructure and other proposals he has. Do the CPI numbers read against that at all? We are hearing from some Republicans, this shows we already have pumped enough money in the economy. We don't.
All right, let's go over to the state of the market here. So it's across the board. I mean, tech is the biggest clean red loser here. Energy, the only sector that's pretty much green across the board. And this right here is going to be the full state of the market. So we're looking at across the board all the stocks. This doesn't just include the S&P 500, but pretty much all the stocks. So healthcare, energy are the only ones that are green and somewhat financials. And everything else, consumer cyclicals, communication services, technology, of course, industrials, utilities, basic materials, real estate, credit services, medical services, consumer defensive, across the board. A lot of red. Oh. All right, so NEO back under $34 here. Tesla now trading under 600, down about 3.5%. Amazon down over 2.5%, almost. Apple down over 2.5%. Nvidia down over 3%. Twitter, Square also down roughly over 5% each. Square almost down 6%. All right, guys. So I'm gonna actually cut the live stream here. Thank you so much for joining in. I really appreciate each and every one of you guys. I do want to mention that if you, all right, so let me take a look. This right here is going to be 2 free stocks with Webull. If you sign up, deposit $100, the link is going to be down in the description below. Also, Patreon is going to be down in the description below if you want to get access to the private Discord here, the TradingView charts, and this right here is going to be the TradingView platform. If you want to get access for that for absolutely free, again, the link is going to be down in the description below. Thank you so much for joining. I really appreciate you guys. I hope you guys got a lot of value out of this. I will be putting out a video more so on the macro standpoint, everything that we discussed in terms of inflation and interest rates, right? Money supply, inflation, interest rates, and what we can expect moving forward. And again, it's very challenging for us to really predict, right, what we're gonna see in 2021. But stay strong. You know, we're all in this together, and this is just the market cycle that we're experiencing, right? This happened literally in March 2020. This happened in March, February of 2021. So this is not something new. This is simply a very significant rotation that we're seeing, and a lot of stocks across the board are selling off, right? As we see like a lot of money flowing into cryptos and a lot of other asset classes as well. We are going into like a risk on to risk off moment, which is why we're seeing a lot of growth stocks getting hit the hardest. But thank you so much for joining. Let me know if there's any stocks that you'd like me to cover, so comment down below. And also make sure that you drop a like, subscribe if you're new to the channel. As always, happy investing, and I will see you guys in the next live stream.